Yo, what's up, team? This is Coop. I just wanted to hop on here real quick and break down options contracts, explain how they work, what they do, and why they matter if you're trading. So, a lot of people that I trade with every day, that I teach, that I interact with in the chats, etc., everybody buys options contracts, but they don't know actually what they're buying. So, options contracts are a lot of moving parts, and that's kind of why I wanted to make this video. Because once you actually understand what an options contract is, it's gonna absolutely separate you from the people that are just gambling directional SPX 0 DTE options. You're gonna know everything from what a strike is, what an expiration date means, how to trade on a specific stock, whether it's a micro cap or it's a mega cap. And yeah, I think that's it. So sit back, relax, and enjoy the video. So I figured it'd be easier to just pull up a blank document and kind of write it down as I'm going along, because it's a lot of information, it's hard to digest, and I am not a pro video editor. So I'm just gonna write it down as I go along. So let's just get right into it. So when you buy an option contract, you're not buying a piece of stock. You're buying a contract. The contract gives you the right, but not the obligation, to buy or sell 100 shares of a stock at a set price before a certain date. So this is going to apply to all your normal stocks and also your ETFs. So it's going to apply to SPY, QQQ, let's say Apple, let's say Meta, etc. This does not apply to SPX, NDX, RIP, and the other indices, because those are cash settled, and we're not going to be going over those in this video. So let's get right into it. So like I said, the contract gives you the right, but not the obligation, to buy or sell 100 shares of a stock at a set price before a certain date. That's why we can't do indices, because these are cash settled, whereas SPY has shares, QQQ has shares, Apple, Meta, etc. They all have shares, and they can be exercised at expiration, whereas SPX, NDX, they can be exercised for cash, not shares. That's how those are different. But we're not going to be going over cash settled options, so let's delete that. And yeah, that's pretty much all an options contract is. It's a written agreement between you and someone else, the buyer and the seller. So let's just, for an example, let's say Apple's trading at $200. So Apple is trading at $200. And I buy to open, BTO, Apple 205 calls that expire next week. So 6/16, they're usually weekly expiries. Today's Tuesday. Let's just say the expiry 6/27/2025. So that gives me the right to buy Apple at $205. That doesn't matter if Apple is trading at $250 at expiration or $180 at expiration. So if Apple's trading at $180 at expiration on June 27th, 2025, or whatever our actual expiry date is, you're not going to want to exercise that. That means that the option is going to expire worthless. And this is really handy if you're selling options, because you're doing the opposite. You're betting on the price. So let's just say you sell to open Apple 205 calls 6/27. You are the rider. So the rider is selling it and the buyer is buying it. So you have opposite directional biases. So the way that the person that's selling the option can profit is whenever Apple is below 205. So if they're at 204.99 at expiration, that option is worthless, is worth nothing. And the way that the buyer profits is if that option can be exercised. I don't really exercise the options. That's why I usually sell before expiration, but it gives it intrinsic value, which in turn makes you a profit on the option. So that's the risk with trading options. So if you're buying shares, it's a lot less risky, because you can just sell and you're not going to lose your entire investment. Whereas if you're buying, let's say contracts are $1.50, which is going to be $150 because you're trading 100 shares or 100 whatever. So you always have to multiply what you see on your Webull or your Robinhood or whatever. Let's say it's trading at $1.50. You have to multiply that by 100, and then you get your options price, and they'll usually do that math for you. But yeah, so you can lose the entirety of your investment right here. Whereas if you're buying shares, Control B, if you're buying shares at $200 and Apple stock is, or at $205, and if Apple stock trades below $205, let's say it goes down to $200 by expiration, then you're only losing $5 a share. Whereas if you're trading options, you can lose the entirety of the contract value. Also, correction, Apple is not a PPL, it is AAPL. I'm not sure why I was thinking that it was APPL. I've traded a lot of tickers today. My brain is pretty fried. But let's just go back to the basics. So I kind of told you guys how you can profit with options, how you can sell options. So let's just talk about what even is an options contract. So usually they're going to look something like this. So let's say we're trading on Meta. Let's delete that. So STO or BTO, it's going to be you're selling to open or you're buying to open. STC or BTC, you're going to be selling to close or buy to close. So let's just say we're buying an option for simplicity's sake. Let's say we're wanting Meta to go up by next week. So we see an option that's 1 or 2 strikes out of the money that we like. So we're going to buy to open. Let's just say for Meta's sake that they're trading at $400 a share for simplicity's sake. So we're going to buy to open. That's what BTO means. Money Meta. That's the ticker that we're trading. So we're going to go 1 to 2 strikes out of the money. Meta usually trades at $2.50 a contract. So let's just say we want to go 405. So that's going to be 2 strikes out of the money. Out of the money meaning that we're hoping that the underlying needs to go up for us to actually turn a profit. So let's see here. Buy to open, Meta 405 call at a certain price. So these are probably going to be a little bit more expensive because they are a swing. So let's just say they're going to be 5.00 for simplicity's sake, which is actually $500. And then let's do our expiration, same as before, 6/27/2025, completely fictitious date, contracts, etc. But this is kind of the meat and potatoes of what an options contract is. We're buying to open, Meta, we're wanting it to go up. We have a bullish bias because of this C. This means calls. Calls whenever you want it to go up. Puts whenever you want it to go down. The difference between calls and puts. And this is the premium. This is how much it's actually going to cost you to enter the trade. And this right here, once you multiply this number by 100, this is your maximum loss on a naked options contract. So this is why it's a little bit more risky, but it also comes with more potential rewards. So this is why understanding options contracts actually matter. So options are a tool. They can be insanely powerful, but only if you actually understand what you're holding and what you're doing. Too many people buy contracts that are way out of the money with no time left, and they lose all of their money within a day. So that's what's going to happen with our SPY, 0 DTE, directional gamblers. They trade contracts that are 5 strikes out of the money, 0-day expiration, meaning there's no time for SPY, the most traded options ETF. There's no time for that to go up or down based on their strike just because it's 0 DTE. So every move that SPY has to make, it has to make in 1 day. So that's why so many people get burnt on options and they'll stop trading. It's so important that we understand what we're actually doing. You need to understand, where's my break even? How much time do I have? What does the seller of this option that I bought it from want to happen? Am I paying too much for this premium? And that's where your strategy starts. That's how you can say, hey, I don't want to go all the way out of the money. I want the options to already have intrinsic value, meaning it has actual value. That means it's in the money. And yes, you can also be the seller. That's where we get into our, let me write this down real quick. This is where we can get into our, let's say, iron condors, our vertical spreads. Let me see what else. Our cash secured puts. And yeah, that's a little bit more advanced stuff. That's stuff that I trade on a daily basis, and it's going to be what one of the next videos are about, kind of how to benefit between time decay I'm going to go over Gamma and how we can use it to trade not directional, but non-directional. So we can trade if SPY closes between our two prices, our two strikes that we set. It's a really effective way, it's a lot less risky, and it's a lot cheaper as well. So looking forward to getting into that in the future. Next time you go to buy an option, just remember you're not buying a lottery ticket. You're entering a contract with real terms, real costs, and a real person or institution on the other side. Understand the structure, make sure that you trade with confidence. If you don't trade with confidence and if you ignore your structure, then you're going to get eaten alive in this market. Options, stocks, cryptocurrencies, lots of people take the short route and they get burnt really fast, and I don't want that to happen to you. So that's why I'm trying to make these videos to explain a little bit more about what we do, how we do it at Market Vision, how we can help you become profitable. So yep, I think that's it for this video. I hope that this helped. If it did, like the video, drop a comment with what you're still confused about. I'm still really new to these videos, so please excuse any stuttering, any audio errors, etc. This is like my 5th video, my 2nd one explaining a concept. So, and like I said, I'm not a professional video editor, so that's why we had the Google Docs pulled up. But yeah, maybe eventually we can get to that level. But yeah, hit that sub if you're really trying to take your trading seriously. I've been profitable in the stock market for years now, and my goal now is to help others. I know that whenever I first started, there's a lot of fake gurus out there, a lot of people that don't know what they're doing. They've been trading for 3 months, 4 months, and they think they have the market mastered, and that's just not the case. So make sure that people that you're following know how to trade. Make sure they share their profit screenshots. Make sure that they're legit. And yep, I think that that's it. So I'll see you guys in the next one. I appreciate you watching to the end if you did. Thank you. We'll see you.